next we're going to be talking about the moving average. Moving average is you can do from 30, you can do 50, you can do 100, you can do 200. Today I just got on there 200 because it's kind of an overall look. And again, the moving average gives you kind of an extreme out, right? So moving average should coincide with your outside diagonal channel. And so you can see that price comes over here, it hits 2 times, and goes up. You can see here, price comes down. Again, it broke the channel and it broke the moving average line, came down and then came back up. So you can see though back here, it's way far away from the moving average. And that's just because basically it's a 200 moving average. So if we were to take and change this moving average down to a 50 line, or even a 100 line, we'll just start with a 100 line, you'll see that it will tighten up and be a lot closer. So now it hits once, it hits twice, it breaks through and it changes. And now you see that price candles are moving underneath this moving average line, which basically if it's above the moving average line, it means uptrend. If it's below the moving average line, it means downtrend. Now, I tell everybody all the time, because we talked about building channels, one of the easiest tools to use is moving average, right? So when you're building a channel, you can see if you flow your diagonal line with the movement of the simple moving average line, then you'll be able to see that there should be confirmation there. So again, you just kind of draw your lines in that would match the moving average, and it should give you some kind of confluence that says, hey, this is the right way to draw this channel. I don't use the moving average as an indicator to buy or sell, especially sell, because basically it doesn't show us the top of the range, right? If I'm going to buy low and sell high, where there is no bumping or resistance or anything like that. So mainly the support and resistance of this is kind of on a smaller time frame, right? So it'll give you the ability to draw your channels, but it doesn't really give you 100% of your exit strategy, right? Because when you're going up, there is no line. Now, Bollinger Bands, some people like those. I don't like those. They're a little sporadic. It seems like it's breaking through all the time, but it does act as a support and resistance line. I'm not denying that. We're just not going into that aspect today. I'm just using the moving averages because it's such a basic. But the Bollinger Band would basically take the same exact angle to the outside, and it would give you a resistance line. So I don't like using Bollinger Bands because it doesn't give me kind of that outstream look. It consistently bumps up against the candlesticks, and so you can see there's multiple targets happening here, right? So that's a high. So do you sell there because it broke through the Bollinger Bands? Do you sell here? Do you sell here? Do you sell here? And so for me, Bollinger Bands aren't really consistent like a channel or a trend line or something like that. So moving average I just use to kind of confirm, am I going the right direction? Does this look like the correct angle? And so you can see that it kind of follows up on this channel here. And you can use that as just a quick aha, is this working for me? Am I in the right direction of where trend is going? You can see that trend has broke now. And so really there is no confirmation of a downward channel because you don't have a long enough line there. So it is kind of a lagging indicator. It doesn't really tell you, where it's going to go. Is it going to go to $10, $30, $40? You got to wait on it. So the moving average as a support and resistance line, it is used for support and resistance line. I don't use it much, maybe just if I'm a little confused because it's whipsawly, back and forth motion. Maybe that would be the term I would just put it on just to confirm. All right, let's get into patterns. All right, so with patterns, there's multiple patterns here. You can see that this is an ascending triangle, right? So what do you have? You have resistance. You have a horizontal line, and so you have one resistance. You have support on a diagonal line. You have resistance on the horizontal line, and then on the diagonal line, you have support, and then it breaks out. So now we're looking at just basically a triangle. It has a diagonal line and a diagonal line, right? So you have support, resistance, breaks out to the downside. This also can break up to the upside. You have a channel. We've already talked about that. You have a rising wedge, right? So you have same like the triangle, but both of these are going upwards. So you can see that this diagonal line goes upwards and this line goes upwards also, kind of squeezing together, making that triangle. Price hits resistance and support and then breaks out. So here we have this, that's called a rising wedge. So then we have this head and shoulders, right? So here's the head, and then you have a shoulder here and another shoulder. And once you break down this line, which is your support line, you take from the neckline here to the top of the head, and that's going to be your target, but also your support line. And that's what I mean by there is support and resistance in patterns. So here you see that we have a triple top, right? So horizontal line, resistance, support, resistance, support, resistance, support, breaks down below it. Where we would do, we would draw a box right here, right? And it would give us our target down below or our target up above. This is exactly what I showed you with the boxes. So this is a triple top. Now we have a flag. So a flag pattern is a big up run, and then you can see that basically it's an A, B, C, D pattern, right? There's the A, there's the B, there's the C, there's the D pattern, and then you have a breakout. And usually this flag pole here is the same exact measurement based off of this support level. It will break out and go up to that high, which then that is going to become resistance, which is going to be where you're going to sell your target. Next is we have this double top, same as the triple top. Basically, you have support and resistance, and you use it kind of like a range. Over here, you have the W pattern, which is also a double batter. So same thing, it's basically a range. Once it breaks out, it gives you the confirmation of the top of where it's going to go. Here you have a pennant, which is a little bit more like your triangle. It's just smaller. And so same thing, this run up, and then once it breaks out of the pennant, should be your target, which this is support and resistance, and then this will be new resistance once it hits the high, because this pole should be the calculation of your target. So obviously, if everybody's looking at, hey, this is where I need to sell because this is where price is going to be, guess what? It's going to be resistance because it's going up and everybody starts selling. And so then you will see a horizontal resistance line there. You have the inverse head and shoulders, which basically here's the head, here's the shoulders. So again, once it breaks out the net line, you just basically create this box right here, range, and you add it up here, and that is your target up there. Again, you got another it's called a rectangle. Imagine that. So we have that as a box, and you already know about that. You have a falling wedge. So same thing. Both lines are diagonal. They're not a channel, but they kind of squeeze together, making into a triangle, but they call it a wedge. And once price comes out, where should you go? You should probably go back to the old support and resistance, right? So right here, you would consider that there would be a horizontal line. And in that horizontal line, you're going to come up, you're going to hit that horizontal line. And so of course you would want to sell right there on that horizontal line. Next is channel. We've already talked about that, and triangle also. So based on all of these, we just kind of went through that they all have support and resistance, basically. In the shape that you draw that support and resistance should tell you what it's going to do or where it's going to go. So we saw that a lot of these by the range box that we talked about earlier would be able to accomplish that. You would just know how to read it, right? So right here, you can see that there's resistance, there's support, resistance, support, resistance, support. So this box is going to be a whole lot smaller than this box, right? Because you have this head. And so just identify, if you see this head, then basically your range box is going to go all the way to the top of the head, not to the shoulders, which gives you more movement, right? And that's what we want. We want to make more money. So, sometimes you got to consider, out of all of these type patterns, support and resistance wise, which one do you want to sell? Which one do you want to buy? When do you want to buy? Where do you want to buy? So let's go back to the charts and let's kind of see how these charts show up for us. All right, so right here, I'm going to remove this so I can show you a head and shoulders pattern. So as you can see that we have the head in the blue, and then we have this little shoulder over here. Equally, we have a shoulder over here. So if we take that neckline right here, right, it's an inverse head and shoulder. So if we take the headline down to the top of the head and we duplicate that and bring that up, we should see that we should find a resistance price. And what happened, we can see that we came pretty close, right? It comes in, and maybe that diagonal line started to, hamper us a little bit. But as you can see, basically from the tippy top of this head to this shoulder, Same thing that we were talking about before is basically you have this range box, so this pattern makes a range. And then once it breaks out, we can also see that this was about the same timeline. So again, from this shoulder over here to this shoulder, when it broke the neckline, you can see that it was from November to August. And you can see that the exact same box, because I duplicate it, was about when price went all the way to the top of that range. So again, patterns help you to be able to see how long and when and what is going on with price. If we were to look back, I know we talked about pennants and we talked about flags. So with a flag pattern, you might have something like this. Here's the bottom, which is a low. Here is the high. That is the pole. And then you see this kind of fall down, and you see basically support. So it never breaks through, which means that you have support and resistance right there. So you have the pole, which is the up run. You have the pullback or consolidation or counter trend. And then you take that and move it, the pole. We're just going to duplicate here, and you move that pole to the breakout. And you can see the timing again. So here's the low, here's the high. All we did was duplicate that high to low, and we brought it over here. Here's the low, here's the high. So it actually beat the time frame of this last. So it moved quicker, faster, higher. But then what happened, right? So it got resistance, right? We're talking about support resistance. So the resistance was, this is the movement. Price is going to go from A to B. So the movement from B to C, C to D is going to tell us where resistance is going to come in. Sure enough, came in, people sold off. Now, if we were to look and say, well, what is this next move? We actually have an A, B, C, D pattern, right? So here's an A to B, B to C, C to D. And usually ABCD pattern is symmetrical. So let's just take the duplication and see where price comes in. So we're pretty close. It came down a little bit. It would have come down a little bit further than what we said. But again, it's symmetrical. So price here, support, comes down into our support. So where we were thinking maybe price might go a little bit lower because of the ABCD pattern, it stayed up a little bit, but just a little bit. So we can see that this horizontal support line helped keep price up. And what did it do? It went up. Old highs, right? And so we have a high here. Price comes back up into the high and then stops. Price breaks through that high. What if we put a Fibonacci on there? Where do you think price would go? So we put it from the high, the bottom low down to the high, and let's see where price goes. Well, we see that candlestick right at 40. Where did price go from there? Let's move over the chart a little bit, and it broke through. So it went higher than our 71, but look at, you can kind of see this stall right there. Price breaks up. Why does it break up? Because there's resistance higher. And that's what I mean by the Fibonacci does not always give you the perfect entry or exit place. But for me, I would probably rather be out right here at $39 than try to squeeze that extra $2 out of profit, because what happens if you're not at home? And what happens if price starts falling? And then you see price down here at $37, $36, and you're like, oh no, I missed my target. I should have got out over here, but it's just too confusing. Just when you feel comfortable, get out and be comfortable with the trade that you made. So again, price went through. Don't worry about it. You got out early. It's okay. We got out of Tesla. It was $450. We got out. It went up to $1,000. Let's talk about that as support lines. Did you know that human nature and people love whole numbers? So just as a bonus, I'm throwing that in there. If you look at charts at $50 and $100, you can almost always see a substantial amount of support. Isn't that amazing? So because it's a round number. Look all the time at 100. I just test and see. Look at $100 stocks and you'll see that right around $100 they sell off or they have support and they go up. The reason I brought all this up was because Tesla was just off the $1,000 mark. What is the $1,000 mark? It's a whole number. So for people, I knew that it wasn't going to go to, everybody's saying Tesla $2,000. I knew Tesla wasn't going to go to $2,000 right away because it's at $1,000. It's surely got to back off because people see that whole number. They're gonna sell. So a lot of times that whole numbers, 50, 100, 200, people sell. So be aware of that as a target. If you have the opportunity and you see a diagonal line, you see all these trend lines, you see all this coming into play, look at right here. Just back to the thought of whole numbers, right? So maybe this is telling us $82. Support and resistance. We're talking about support and resistance. Well, if you could go $82, which is great, squeeze it, right? Get every nickel you can, or go to a whole number and get out at $80. Try to trade just under whole numbers, right? What about $79.95? What about $79.90? Do you really need that extra 10 cents? Do you really need that extra dollar of trying to squeeze out of the market? Go ahead and get out at a whole number because I will confirm price, look, right? You're near $40, support resistance. $50, you're near support resistance. $60, you're at support resistance. $70, you're at support resistance. Are you guys seeing what's going on here? $80, you're at support resistance. Numbers, whole numbers are support and resistance lines. So now we've talked about horizontal lines, diagonal lines, channels, trend lines. We've talked about Fibonacci's. We talked about moving averages. We talked about patterns, all having support and resistance, and how that support and resistance comes up and where it shows to give you the confirmation of where you can plan on it selling, where you should buy, where you should sell these trades. How long should you be in these trades? All of these things for support and resistance is crucial to making the right plan for you. Don't let everybody sell you on the right plan of what they think is the right plan. Based off the information that you learn, based off the information that you know, based off the way that you see the stock market using these kind of support and resistance levels, what do you feel comfortable with? Do you feel comfortable with getting in on a head and shoulders pattern? Or do you feel comfortable with a head and shoulders pattern based off a diagonal support level, based off trend lines, based off moving average, based off Fibonacci? What do you feel comfortable with? And I believe the more that you apply these 7, 8 different ways that I showed you on how to see support and resistance, you will be able to confirm in yourself knowing when you put your money at risk. And that's what you're doing. You're putting your money at risk, but money should grow for you. The stock market was not created to go down. The stock market was created to go up. You ask anybody who's on the stock market, you say, do you want your stock to go down? The CEOs, they're saying, no, I want my money to go up. I've got money invested in this company. We have employees invested in the company. I have my name invested in the company. I have money invested in this company. We want it to go up. You want it to go up too, but you have things invested. And so right now you're learning and you're investing in your mind. You're investing in your future. You're investing in your family. You're investing. And so I want you to make sure that you have the absolute right confidence based on what everybody else is using in the market. Everybody is using these support and resistance levels in some way in their trading. You cannot trade. Say that with me. You cannot trade. I cannot trade without support resistance lines. I cannot trade without knowing higher highs, higher lows. I cannot trade without knowing equal highs, equal lows. I cannot trade without knowing lower lows, lower highs. You cannot trade off not knowing what support and resistance is. There's no way to trade because there's no indication of why you're doing the things that you're doing. I know a lot of people use the fundamentals. That's one way that they trade. A lot of people just use Kramer. They watch, CNBC and they say, well, this guy says to do it, so I'm going to do it. But for you, I'm talking about you. You know how to do things. You're creative. You understand things. You went to school. You learned. You're knowledgeable. You're smart. This is just another thing to learn. You can do it. The information is not hard. You will take time. You will lose some money. but keep applying these things that you're learning. Right now, turn off the YouTube and go to your charts and start drawing in these lines and see. I literally hundreds of thousands of charts I've been doing for the last 20 years. I've done this exact same thing. This is nothing to me to sit there and go through a chart and just say, oh, well, let's see, where are higher highs? Where are higher lows? Okay, what does this look like? You know, I could take a naked chart and immediately start drawing off of it. And what am I going to do? I'm just going to go into horizontal where we started first, right? I'm just going to say, what does it look like at the highs and the lows? And I'm going to start drawing lines across there. And once I start drawing in enough lines, it's going to tell me a story. And what is that story, right? So can I just show you? I mean, just immediately we're already into something here. So what is this? Is this a shoulder? Is this a shoulder? Is this a head? You know, yes. All right. Well, what do we know? Once you break the neckline, where's price going to go? Well, you take the head and you go up to the shoulder and you draw that across. And what was that? That was also a horizontal line. And what do we see with that horizontal line? We see that's our neckline. And so we know that to be resistance. So I'm going to draw that horizontal line in here if I can ever get it. And we'll move it up. Now, what do we also see? We see price pretty close right here to that support line, which if we duplicate this up and we move it out, we'll probably see some pretty major, do you not see major support and resistance right here at this secondary box range? All right, well, I'm going to blow your mind. Let's do it again and move that box up. And what do we see? Right there, almost to the penny, support and resistance. Over and over and over, we could do this. And that's what I want you to be able to see. I want you to take a chart that looks disastrous, that's 35, 50% off the highs, and say, oh my gosh, I know right what's happening. If you could see this as a target 10 years ago, based off of this little range, and even if we look at the confirmation of, right, so let's just shorten it up. We did the head and shoulders. Now let's go back into the range, right? So from the low to the high, how long did it take? We could see that took about 2 years. All right, now if we were to change that up, and let's duplicate this out, duplicate it from the basically broke through, right? Broke through. You can either use right there at the breakthrough or you can use this bounce. So either one, basically within that same time frame, it went up. Let's shake our heads. Here we go. We broke through, found support, and price went almost to the dollar based on this resistance right here. We'd be looking to sell because it was resistance. And that's what I'm trying to tell you, the success in support resistance based off what you can see. We just did 3 simple lines and you would have known exactly where to buy, where to sell. Until next time.